You're listening to Sound Money from Casey Research.
Welcome to Smart Money Radio from Casey Research. I'm Andy Duncan, coming to you from London. Today, a very special interview with one of the world's top energy analysts, Casey's own Marin Katusa. Not one afraid of stirring the pot, Marin was recently interviewed at Cambridge House's Vancouver Resource Investment Conference by Cambridge House's Live's Bridgitte Anderson. He had some controversial takes on the future of the Keystone and Northern Gateway pipelines, why shipping oil via rail is a bad idea, and what's next for energy investors. A must listen. So, without further ado, here's Marin Katusa interviewed by Bridgitte Anderson at Cambridge House's Vancouver Resource Investment Conference 2014.
Welcome to Cambridge House Live. I'm Bridgitte Anderson, and I'm joined by Marin Katusa, who is the Chief Energy Investment Strategist at Casey Research. Nice to see you again.
My pleasure.
Why don't we start off first talking about what's happening in the Middle East right now, and specifically the situation with Syria. So what kind of impact is that having, or could it have, on oil?
Well, it's having a huge impact, and the reality is it just shows the political instability in the region. And look, Syria's now been going over for 2 years, and people are starting to look at the promising situation of Iran but again, the Americans and Iran haven't agreed on what the definition of enrichment of uranium is. So the reality is the Middle East is still a very, very unstable place. And that's why you see the risk premium in the Brent oil, which is the international priced oil,
right,
and is trading at over $10 per more than the WTI, which is the North American price.
And what's your outlook then?
I think it's going to continue to be the same, if more. Look at Saudi Arabia, where you have over 35% unemployment of people under the age of 35. There's a lot of issues. Then you got the Sunni and Shiite issues moving there. And then you have the amount that the royal families have invested to keep people happy. It's not really working out. So the area is a ticking time bomb.
Okay, let's bring it closer to home. Let's talk about the Gateway proposal and what's going on there. Do you think it's likely that the Prime Minister will approve this?
Yes, and I've been saying this for years. Not only will the Keystone XL get approved, the Northern Gateway will also get approved. And what I believe you'll see Stephen Harper do is he's going to approve this, but to give something back to the environmentalists and the protesters, the Prosperity Project owned by Taseko will not get permitted. So he's going to give a give and take to both sides. And if you think about it, from a Harper standpoint, an Alberta-backed guy, oil's big revenue, a copper mine, even though it's a great potential copper mine, it's not going to get permitted.
This is potentially a good project, and I know that it has been controversial, but it certainly does have a lot of support as well.
Yes, it does. And unfortunately, I just don't see Harper going bullish on both projects. He's going to have to do a give and take, and he's going to go to the environmentalists, he's going to go to the First Nations and say, look, we need this Northern Gateway pipeline, we're going to bring in all of the security measures for it, but we're not going to approve Prosperity. And I'm not saying it's the fair thing to do, that's just what I see happening.
You don't think that there's going to be enough opposition from First Nations and environmentalists to stop the Northern Gateway?
There will be lots of opposition, but it's just too big of a ticket item for the government. They need it.
Well, what do you think the risk is when it comes to opposition, that this could get tied up in the courts?
It could definitely happen. And what I've been saying for years is, look, it's not going to happen on the timeline of the companies, and it's not going to happen on the budget that the companies think. It's going to cost more, and it's going to take longer, but it's going to happen.
Okay, let's look out beyond our borders a little bit. You've been saying that Mexico might be an opportunity, a potential opportunity for investment. So what are you seeing there?
Well, look, Mexico in the 1930s basically monopolized and took away all of the North American companies, especially the Americans who developed the assets. So you look at a field like Cantarell, which is one of the largest oil fields in the world, it's declined by 50%. So rather than reinvesting into the field, they were investing the profits into social programs. Now the production's become so down that they're a major net importer of gas from the US. So they're going to open up, but it's still too early for companies to go there. What I think the first stage is going to be the US energy service companies that are going to bring the technology, the equipment, and the know-how to be able to revitalize these old fields.
And when we're talking about, I want to just talk a little bit more about gas first before we move on to some other areas, but I'm looking at the LNG sector, and obviously a lot of potential and huge promises of growth here in British Columbia and for Canada. How do you see that playing out? There's about 14 proposals right now, so the BC government has got a lot to deal with, and obviously not every one of those proposals are going to be successful.
Of course not. And you bring up a great point. And let's talk about the Americans who have over that amount of proposals. They have a lot more cheaper gas. Then you talk about Australia, who's about 4 or 5 years ahead of Canada. And then you talk about Russia, who has a quarter of the world's gas reserves. And you talk about Qatar, that has the largest LNG plant in the world. So the reality is Canada's a little bit delayed. We're behind the ball. We got to play catch up.
Compared to Australia, we are too.
And because where we are logistically, we can only sell to the Asian markets. So you have a kind of issue where, all in, we're looking at costs. We would cost more to ship to Asia than the Australians, so we're against that advantage. And then the reality is that 50% of all of the world's LNG consumption comes by 2 countries. Number 1, Japan, which makes up about 38% right now, and then South Korea. LNG potentially may build up to become one of the greatest short opportunities where guys like Kyle Bass and all these really smart, successful shorters in a couple of years may make billions, because we're talking about to build one LNG plant costs about $5 to $10 billion. And there's been such an influx because of the shutdown of the nuclear reactors. If the Japanese do bring back these nuclear reactors, where's all this excess supply of LNG going to go? So there's a lot of risks to the LNG market also. Plus, the biggest wild card nobody's talking about is FLNG. So Shell was one of the main innovators and builders. They built the largest LNG plant in the world with Qatar. They've now built the world's largest ship that can float around to the world, sink anchor, and produce LNG for about half of what we can do off of BC. And if the political game changes, they pull anchor and go somewhere else. Remember, 70% of the planet is on water, and these are proven cheap gas deposits. So there's a lot of risk to LNG.
Well, and you bring up a good point about transportation, of whether we're talking about oil or gas, because that is also coming more to the forefront. There have been a number of comments about the safety of LNG, but then if you look at what happened in Quebec, even when it came to transporting oil by rail, and I know we've spoken about this before, I think that's something that hasn't been enough of a focus yet. Would you agree?
A year ago at this show, we did the debate with the founder of Greenpeace, Rex, and I have all the respect in the world for Rex. But the reality is we don't develop, the new pipelines with better technology, safer. It's 30 times more likely to occur a risk, and that's literally what I said in the debate. And then in July, when we had 47 people die in Quebec because of the oil tanker, the rail cars blew up and got into a car accident. We just had 2 more happen since then. When are people going to wake up that this is risky? And the reason why they're pushing take this fact. In 2008, 500 rail cars were shipping oil domestically. Now it's over 14,000. The growth has exploded because there's a demand for the oil. We need to build these pipelines, and like I said, the Casey Sensible solution, let's replace the old pipelines that were built in the 50s with the new pipelines, and let's get away from the risky shipping oil with rail.
Yet that opposition at the grassroots level is huge, and so to overcome that takes time. And so when there's...
And money.
And a lot of money, for sure.
Yes.
So what should the government be doing to try and push that along?
And they're doing a good job. It comes with education. It comes with lots of marketing, and they're doing a lot of advertising. And the reality, when you want to counter, a lot of people are going with an emotional, non-factual basis. You have to educate, and it takes a lot of time and a lot of money.
Well,
and
it's been said that energy literacy is pretty low in Canada and quite low in British Columbia.
It is.
So the answer to that, as you say, is probably more education then?
Yes, and more time.
Definitely more time. Okay, I want to ask you about uranium, because you're still quite confident. So what kind of time frame are you thinking when we can see some sort of recovery here then?
Well, we got the long-term price and the spot price, and 2013 was a very interesting year because not just did the excess supply from Japan's nuclear reactors hit the market, so there's a big influx of uranium in the spot market. You also had SEC, Southern Edison, California, shut down San Onofre, and that was 10 million pounds of uranium hit the market also. And on top of that, because there's so much U3O8 hitting the market, we're in something called an enrichment underfeeding market, which means the cost to enrich are a lot cheaper than it was 10, 20, 30 years ago. So the Russians, who have about half of the world's tail capacity, can produce a lot more uranium at a lot lower cost in enriching and reprocessing their tails. So it's kind of like, I call it the devil's cut and the angel's share, like in creating bourbon. And we're in an interesting situation, and that's not going to feed through till about mid-2015.
So a longer play for sure.
Yes, but that's where the opportunity is. So the stock market's always about 9 months ahead of the actual physical markets. And if you invest in the right company, we've had a great track record with these uranium companies because the right companies understand the situation, and if they have the financial flexibility and the understanding, there's going to be a major consolidation in the sector. So I tell investors, stay only in the Athabasca Basin, which is the highest grade in the uranium, and you want to stay in low-cost ISR producers, especially Weiser uranium, which is warm ISR. It's just the lowest cost producers.
Okay, that's great, Marin. Thanks very much.
My pleasure.
Thanks again to Cambridge House and Bridgitte Anderson for the interview with Casey Research's top energy analyst, Marin Katusa. Don't forget to visit us online at soundmoneyshow.com, where you can subscribe to our mailing list and listen to all of our podcasts. You can also subscribe to my show on iTunes. That's all for today. For everyone at Sound Money, I'm Andy Duncan. Thanks for listening.